Hey traders, Akil Stokes here, Chief Currency Analyst and Head Trading Coach over at TradingPower.com, and welcome back to another Forex Market Preview video. Thanks once again for joining me. In today's video, we're going to take a look at two trading opportunities that are on my radar. One is going to be on the pound dollar. The other one is going to be on the dollar Canada. I'm also going to share with you a very inspiring message that a fellow trader sent me this week. It has a lot to do with kind of learning from his mistakes, and I think anyone that is serious about learning how to trade, you're going to want to listen to this note because he's dropping some massive knowledge bombs, and is someone that is currently in the same position as you guys are, which is always cool to hear from. Now, starting off on the pound dollar here, I just want to take you through a walk of what price action has recently done. You've seen that we've done an extension down. We followed that up with a consolidation, right? Consolidation period of sideways movement. We've then created lower low, lower closes, and then we've consolidated here. And then most recently, right, we've broken above that level of consolidation and we're starting to consolidate again, right? Consolidation, expansion, consolidation, expansion. For you guys that don't believe that the market only trends about 30% of the time, this is a perfect example of that. Now, just because the market's not trending doesn't mean that you can't find trading opportunities. And if we get another extension out of this current level consolidation, we're going to have a trading opportunity a little bit higher for anyone that is an advanced pattern formation trader. Now, I don't personally trade the daily chart, so this isn't a pattern formation that I will be taking, but I know that many of you guys that watch these YouTube videos, and of course, many of you guys in the syndicate and in the live room with us, you do trade off of the higher time frame. So I want to give you guys something to put on your radar as well. Now, if we take a look at these moves, and let's just delete it for a second here. I'm going to go up to my Constellation toolbar, click live, and you'll see, any second now, come on, there we go. We'll see that we have a potential bearish bat formation forming in this level. This initial move from our consolidation lower is going to be our X to A move, right? It's going to be the initial impulse leg of our pattern formation. Our retracement is going to be our B leg, so X to A to B. This move right back down to previous structure, essentially giving us a double bottom here. This is going to be our B to C. And then if price action, again, were to expand out of this most recent level of consolidation, we would have a decompletion right up here around the 132.68 level. So advanced pattern formation traders, keep this on your radar, and extension up, I should say, will come to our decompletion. And if you're not a daily chart trader, please don't chase this trade. You can see by the potential stop loss, you're looking at a couple hundred pips of loss. And I know that one of the biggest mistakes I've made in my trading career was following a trade that an expert put out that I wasn't supposed to be. And I remember there was a trading opportunity that Jason Stapleton had picked out. This is back when I was a student of his. I guess I'm always a student of his, but back when I was actively involved in his training course. And I was losing money at the time, and he sent out a video saying this is an awesome opportunity. Risk reward is tremendous. Risk reward is tremendous in here as well. Looks like almost a 2.5 to 1. And he said this is a no-brainer trade in his opinion. So, you know, I wasn't supposed to be trading on that time frame, but I did anyway. I took the trade, and lo and behold, it got stopped out. Lost a couple hundred pips. Now, for traders that were supposed to be trading the daily time frame, that's probably an average loss for you. So the trade didn't really hurt as much as it should have. For me, a couple hundred pips, because I wasn't a daily trader, I traded off the hourly charts mainly. A couple hundred pips basically made up for about, or I should say took away, not made up, took away about 2 months of winning. And it was just a massive hit to my account for a trade that I should never have been in. So again, make sure this fits into your trading rules, make sure this fits into your trading plan, and make sure this is something you're supposed to be trading. And you're not just entering it because Akil says, hey, this is an opportunity. For you guys looking for opportunities on the lower time frame, and this is something that's going to be on my radar heading into the day, I'm going to pay attention to our current level of structure. Now, we've just come out of a tricky situation in the market. For you guys that are with me on a daily basis, whether it be in the syndicate or the live room, you know that whenever we get levels of structure like this, my trading radar really signals a red flag. This is a really dangerous position to be in. And it's a lesson that I learned from making years and years of making a lot of donations to the market. For you guys that may be new, whenever I say making donations to the market, that means essentially I lost trades doing stupid stuff. But I call it donation because I believe that it goes towards learning. Eventually, I learned to look at my losses and evaluate them and try to make myself better. But this is always a tricky situation when we have a double level of structure. I really liked this level right here. We saw a high momentum move come directly after this swing. And typically these levels, the market respects them again. For you guys that are really big into supply and demand, this is going to stand out to you. And the only problem with this is that we have another level of resistance right on top of it. And typically the level between our higher resistance and our lower resistance here becomes kind of like a trap level. The market knows that traders are going to be looking at this level. The market knows that stops are going to be right in this level right here. And sometimes it can become a very sneaky trap where traders will get stopped out and the market will go ahead and reverse at the higher level. So it was something that I did not involve myself in. I was looking at it. But just in general, you want to be aware of levels like this. Now, as we go down to the 4-hour chart, right, keep that in mind about the double layers. Here's what's happening on the 4-hour chart. Now, on the 4-hour chart, you can see that price action has pushed up, right? We have then retraced. Our RSI went massively overbought. Sitting at about what we're about 88.90s by the time we hit here. We then retraced off of that level and we've come up to give us a double top, right? With a lot of RSI divergence, bearish divergence on the RSI. Again, just look at the oscillator at the bottom and look at price action on the top, right? Equal highs, obviously lower highs right here. We're also right at that higher previous level of structure that we talked about on the daily chart. Now, this is a valid double top. I don't think it's a bad at market entry for the open today on Sunday. You're going to get a rather good risk reward. We know that stops need to be above your previous structure high. So stops need to be above the 30-50s area. We'll just draw a line right here to just kind of give you a visual representation of where stops are going to be around somewhere in this area. And we know that targets, there are a few ways you can take targets. Let's just measure this as our stop loss, right? You can take a very, where's red at? There we go. You can take a very conservative target. There we go. Very conservative target. Just look for a retest of structure down here, right? Something like that. Or if you're more aggressive, right, or trading multiple positions, you can look for a move all the way back down to this level as well. Now, the one tricky thing about this situation is because we have this previous level of resistance there, this is also setting up as a trend continuation opportunity as price action has put in a higher high, higher close right here. We've then retraced back to previous structure highs, right? And this is setting up also to be a potential trend continuation move where we would expect an extension. So you're getting two different kind of ideas on what to do in this trade. And this is the perfect opportunity to implement a technique that we call the 2618. And essentially the 2618 is a safer version, a more conservative version, I should say. There's nothing safe in trading. A more conservative version or a more conservative approach at taking a double top. So instead of waiting for the second strike entry, which would be our double top, you're going to wait for price action to come back down here, create a lower low, lower close, right? Really show you that, hey, this level is going to be a rotation in trend. You then bring on your Fibonacci retracement tool from the swing high to the new swing low, and you wait for a retest of that 618 Fibonacci retracement, and you look for an entry reason in that zone between the 618 and the highs of your double top, and you use that for a reason for entry to trade it lower. So again, that's going to be a more conservative approach at looking at this trade. And if you guys are new to this channel and you're unfamiliar with this 2618 trade, just go over to our website, tradeempowered.com, right? Right here on the homepage, you can see free training, get it now, the 2618 strategy. I think it's about an hour and a half long session where we teach you the 2618 strategy. It's a very simple strategy, simple technique. certainly want to invest some time in using it, especially if you're not familiar. And the same thing, we can shoot for traditional targets at the 2618 as a retest of structure down here. Or, I do like this level in here. Not only do we have a 50% Fibonacci level, and again, technically 50% isn't a Fibonacci number, but it's a psychological number because it's the halfway point. Not only do we have a 50% level right here, but if I draw a horizontal line out, we're looking at a level where structure has been, or price has found both support and resistance. So you can see resistance, oops, wrong tool, let's go, resistance, resistance, resistance right here. We have support, support, support right there. And we can look left, and you can even see some consolidation here as well. So definitely not to add the 128 even handle, right? $1.28, psychological number as well. If we get that retracement, I think we can certainly shoot as low as that $1.28 level on pound dollar. So a few opportunities for you. Again, a double top at market, or if you're a little bit more conservative, you can wait for a 2618 opportunity. Now, before I get to the dollar Canada pair, I want to take a time to read to you the message that I got from a trader this week. So let's check it out. He says, Akil, nice blog, nice interview with the two blogs, and nice article about retaining information. If you guys haven't seen it already, I did another podcast interview with the two Blokes trading this week, talking about, or it was released this week, talking about being adaptive in trading, making adjustments, and really surviving surviving long term. It's a good interview in my opinion. I also wrote an article for Steve Burns called, I forgot the title, but it talked about how to learn and the fact that many of you think you're learning, especially by watching YouTube videos like this, but you're really not retaining the majority of the information. And that can be a big trouble when you try to transition it to the charts. And I guess that article really struck a chord with this trader, and he wrote a delicious message here that I think will inspire a lot of you. So don't just skip over this part. Take time to read it if you're very serious about becoming good. But Kevin says, hey, Akil, I wish I did more during the early stages of my trading journey. Looking back over the past 2 years, if I just worked twice as hard every day, I could have achieved what I set out to do easily in a year, maybe even less, because I wouldn't have had to refresh my knowledge every few months by sticking to a routine. I remember my first 6 months or so after taking the course. I would listen to the live room every night. However, I wouldn't take notes or do any practice outside of the live room on my own. After the first year, I had realized that I was not even close to where I had hoped to be. Maybe I was consistent by that point, but I wasn't independent. I'll admit, there were some really rough patches during those times that I acknowledged that I wasn't in a position in my life that I wanted to be in. At the start of this year, I took a vacation and spent 2 weeks camping with just a book and a pen and started writing down everything I knew about trading off the top of my head. It's about 130 pages long now. That's when I realized I actually knew almost everything I needed to become an independent, consistently profitable trader just by committing 3 hours a day to watching the live room for a year and a half. All I needed to do was start taking the right actions daily and structure the information I had shoved in my brain into something I can use. Being involved in live trading room discussions made a huge difference in my confidence to think independently and retain information this year, something I struggled to do early on. And if you guys have read the article, again, there's a massive difference between just hearing information or reading information. Once you start involving yourself in discussions, practicing and actually teaching the information, there's a massive, it goes from about retaining 5%, 10%, 20% of what you take in to retaining 50%, 75%, 90%. And this is kind of the switch that Kevin made here, was actually involving himself in getting out of that 20% retain zone to about the 90% retain zone. He says, I'm a pretty shy guy, full-blown introvert, often scared of being wrong or sounding silly. If this is your if this is your snap out of it, as Akil says, be wrong with confidence. I tell my traders, hey, if you're going to be wrong, just be confidently wrong. The worst thing that can happen is I correct you, and you find out the answer to whatever your question was. So fail with confidence. Failure is one of the most important parts of any learning process. So be wrong as often as you can. I remember a long time ago, a rant about that picture on how to never give up and how to grind before the last push up to your goal. This is where your character is developed. I'm getting close to where I want to be, just writing up my full trend continuation strategy and another painful round of testing and forward testing that I'm off to the money. I'm off to manage money. Already have 4 clients waiting. That's amazing. Some advice for someone who went about trading half the right way. Be actively involved in the live room as much as you can. Everyone there is only there to help you, nothing else. Practice every day. There's a lot that goes into trading, and it's important to keep your skills fresh for whatever the market will throw at you on any given day. Take extensive notes. Don't rely on only your brain to retain information. That was one of my big issues when I went through my training courses. Don't procrastinate. Even if you try to justify it with learning something else. I almost became an astrophysicist, a psychologist, a pro gamer, and half a dozen other things before focusing on my trading. Yes, other skills are also important to learn in life, but there's a time and a place. Looking back at the time and place to learn other aspects of life is after you have completed your career goals, not during the learning process. Oh yeah, one last thing. As Akil, ask Akil as many questions as you can think of. Something I never took advantage of, and it cost me a lot of time. I know you hate reading, Akil, mainly because I'm not too great at it. But with no one to teach or talk to about trading, this is the best I can do. Ranting in YouTube comment section, 80% retention. And then he goes on, my trend continuation is a little bit different from the way you trade it. So when getting the testing, I'll be taking some time off the live room like Jason Greystone did to focus on my focus. When I'm done with my trading plan, I'd love for you to try and break it to see if there's anything you would do to improve it. This is awesome stuff, guys. And again, if you're a trader that kind of skipped past this, that just says a lot about how serious you are about learning. If you stuck with this and went through this, I don't know, maybe 4-minute long paragraph, hats off to you. That means you're hungry for knowledge. You're hungry to discover what it takes to get better. And this trader is sharing with you a great example of kind of the mistakes that he's made in the past and what he's doing now in the future. And that's the type of community we have at Trade and Power. We have a community of traders that want to see the next person get better. We always talk about the journey to the top of the hill and how a lot of people in life, they climb to the top of the hill and then they kick rocks back down in the faces of those who are climbing beneath them. The difference with our community, which is, we're really blessed to have it. We're just blessed with the character of people involved with us, is that instead of kicking rocks back down in your face, right, they're turning around, they're reaching a hand back, and they're trying to help elevate you. They're trying to help get you to the top of that hill as well, right? That way we all win. It's not about me being great and no one else being great, so we can boost our ego and our pride and say, oh, I'm the best person ever and no one else is as good as me. No, right? It's a lot more funner, right? There's that phrase again. A lot more fun when you can help people up with you, and then you're all at the top, and you have some amazing stories to share. So I appreciate it, Kevin. I will definitely try to break your trading plan as much as I can. That's what I do best. All right, that took longer than expected, but let's head over to the dollar Canada. This was a pair, if you watched the last video here on the Trade Empowered FX website or my trading blog, this was a pair that we took advantage of last week. And this pair really shows patience because if you remember, syndicate members, and also if you follow me on TradingView, I originally started looking for long opportunities on this pair. As soon as we had a higher high, higher close here, as soon as we started getting a pullback, I started looking for long opportunities anywhere in this area. And this was back in, I think, May. And I never got that opportunity. I waited, the market ebbed and flowed, never met anything in my trading plan, so I never executed a trade. And it wasn't until we hit structure right down here that I got my first opportunity to get long. Unfortunately, the market didn't follow through. We came about 75% of the way to my profit level, and then I got stopped out for break even. But it just shows the patience and discipline that it takes to be a trader. You're going to have lots of ideas, but it's important not to rush into those ideas. You need to sit back and really wait for what you need, right? Have a plan, but then sit back for the market to fulfill that plan. Again, be predictive in your analysis, be reactive in your execution. So after we broke this level, I immediately started looking for short opportunities. And again, if you saw the video, you know exactly what I'm talking about. If you haven't, make sure you go back and watch the last video here. And there were a lot of traders out there that say, "Hey, Akil, I thought you had eyes on getting long this entire time. Why are you short?" And well, now because market conditions have changed. And there's a big difference between being a Forex trader in general, a trader versus an investor, right? An investor, you're kind of taking a personal stake in the company or in the currency, and you're speculating on a long-term bias. I'm a trader, right? I'm like a mercenary in the market, guys. I don't really care what pair goes up or what pair goes down, what pair is long, what pair is short, what pair is weak, what pair is strong. I can really care less. I just want to be on the right side of the move. So if something on this chart shows me that we're more likely to go down before we go up, I want to be involved in a short move. If something on this chart shows me we're more likely to go up than we are to go down, I want to be on the long side, right? I don't care about my last idea. Oh, the kid just broke in. So what's going on, buddy? That's why we do these the fun of recording videos live. What was I saying though? Man, I don't know what I was saying. But the key is I just want to be involved. I want to be involved on the side of the move that my analysis shows me. I don't want to have an ego in saying that, hey, I was looking to get long for this for so long that I can only take long opportunities. I have to do it to feed my ego. I can care less about my ego. I'm trying to feed my bank account. So we got short here, and then we ran into a previous level of structure. There was a potential for long opportunities here as well at the end of last week, but we recently had a break and close below, so I'm still thinking short. So the big question that I'll be looking for this week, right? When I think short, I look for a pullback, right? So some type of relief and then an opportunity to get short in the market. But the big question I'm asking myself, right, when I go through the IPDE process, identify, predict, decide, execute, identify that we have a lower low, lower close, right? That the market is more likely to go lower than higher from this level. I want to predict where does the market have room to go to. And this is a tricky situation because we had really a very choppy stair step up. You can see the market as we retraced up, right? We didn't do so cleanly. We put in a lot of, I'll just do it this way. We put in a lot of little dips here. There are a lot of levels of structure that we can come into. So it could be very difficult to make a prediction on which one of these levels is going to be the important one versus the ones that are very non-important. And this is where we want to bring in our DSR level, right? We want to go to our indicator tab. We want to go to our indicator and find our dynamic support and resistance indicator right here, Trading Power DSR. Now, I'm sitting on a daily chart right now. So what I want to do is I want to go to a weekly time frame, and I want to set this to 1 week because 1 week would be the higher time frame of my daily chart. And what this is going to do is going to give me a visual representation of the major level of structure. Where are the major levels of structure based on the weekly chart? And it's going to allow us to have a lot more confidence in our decision. So you can see we just came down to a major level. We broke and closed above it. Our next major level of structure is going to be right down here at about 125.50. So my prediction is that Canada could go as low as this 125.50, really this 124.60s levels before we run into major structure. And that's going to help later on with target projection and whatnot if I do end up getting involved in the trade. So what I'll be looking for this week, and for you guys that are in the live room in our syndicate, you'll be kept up to date on this, but we're going to look for some type of pullback, right? I'd love to see a little bit of a bigger break below this level of this structure level, but I would expect some relief in the market, right? We put in a very steep move down here. We started putting in kind of a falling channel. You can see the RSI start to really level out and curve, right? So it wouldn't surprise me if we had some type of pullback on this pair. Again, I would prefer a better break and close below. So I'd prefer a move down first and then a pullback back to this $1.30 level. But if we don't get this, if we pull back from here, I'm going to look for a move really back up to our previous level of structure, right up here around 131.80s and a little bit higher around 132 flat. So again, it's predictive in my analysis. It's reactive to what the market's going to do. So right now, for you guys asking and screaming at your computers, what should I do? What should I do? Where should I sell? I don't know yet. I have an idea in place. I have a theory. I know what I want to do. I don't know where I'm going to do it at or if I will be able to do it at yet, because that's not up to me. That's up to the market. And we really have to evaluate how the market moves during next week and just continue to do our analysis each and every day until we can come up with a solid idea of how and where we want to enter the market. But certainly keeping an eye on dollar Canada for short opportunities. And again, for you guys interested in the DSR level, just head back to that Trade Empowered website. Go ahead and click the products and services tab at the top. Scroll down a little bit and you can see, where's it at? DSR right in here. You can click learn more, and there's a nice little training video by yours truly on how to use the DSR. So I appreciate you guys joining me. As always, thanks for getting us to 100,000 subscribers. Next is what, 150,000, 200,000? I don't know. I don't really care about the subscribers really. I like the quality of subscribers over just the quantity, but I also like setting goals. It gives me a drive to do something. I think there should always be some type of goal in mind. So let's go for 200,000 subscribers. That sounds fun. All right. So in order to do that, I need you guys to keep supporting this video. That means keep hitting that like button, keep hitting that share button, and of course, keep spreading the word of what we're doing here at Trade Empowered, and helping us to continue to grow what I think is the best community of traders out there. I will see you guys next week. You enjoy your 4th of July. Transformation members, we have our private strategy lab on Monday. There will be no live room on Tuesday due to the holiday. And then we'll be back in the live room in the syndicate on Wednesday of next week, all the way till Jobs Day on Friday. So until then, plan your trade, trade your plan. Take care, and I wish you guys the best in another week of trading. All right, traders, so I hope you enjoyed today's video, and if you did, please show us by hitting that like button and subscribing by clicking the button right below. If you're looking for more educational content, feel free to head over to our tradeempowered.com website, or also take a look, and you'll see more videos available for you. Have a good one.